live. We're live. Hi, Presley Reader. Welcome to the 2020 Phoenix Business Forum. We're excited to be with you. You might know the Phoenix Business Forum as the Financial Forum, which has been going on for 11 years at Living Streams Church. Our visionary sponsor, Mel Schultz, started it 11 years ago, and now here we are in 2020. I'm with Slivinski. And what we're going to do is we're going to have a conversation. We hope you like it. We're going to just talk for a little while. Steven is an economist. I think that's pretty appropriate for the times we're living in. Not that economists aren't appropriate all the time.
We're terribly inappropriate a lot of the time, actually, but still.
Steven's a great friend. I'm excited about this conversation, and I hope that through the conversation we get you some interesting information, we get you some inspirational thoughts, and some education about what's going on in the business community. I do want to thank Living Streams Church. All this equipment, this location, and the hosting of the event is great. And I think it's just great that a church wants to be involved in helping to educate the business community and bring in speakers like Steven, which is what we're going to keep doing every month. We're also going to be posting on social media, and we'd love for you to engage because Mel Schultz has taken a bit of a step back, and he's asked some of us to come up with new ideas for how to run the forum, and we need your ideas. We'd love for you to engage with us. Let us know what's working, what's not, what kind of information you'd like to have, and eventually we're hoping to get back in person so that we can build those relationships that have made such a difference for all of us over the years. And so once we do that, we'll of course be letting you know. But get engaged for sure, and hope you enjoy this conversation today with Steven. So again, Steven Slivinski, he is an economist. He's a good friend. I respect him a lot, and we've had a lot of good conversations about the economy and other things, including family. Mm-hmm. I'm going to let him give you his bio, and then we'll jump into the conversation. So tell us a little bit about your background, Steve.
Sure. So as you said, I'm an economist, although one of the things I like to tell people sometimes is that I'm actually also a translator. I like to translate from economics to English, because a lot of economists don't typically try to talk to non-economists a lot of the time. So I like to think of myself as sort of an interesting kind of go-between in that sense. But my professional background stems all the way back to the East Coast. After I got my grad degree in Washington, D.C., I worked at places like the Cato Institute, George Mason University is where I got my master's degree. Moved out here, worked at the Goldwater Institute. I work at Arizona State University now. And through the entire time, even going back to the East Coast, I worked at the Federal Reserve Bank for a little while. And a lot of my research really over the years has been looking at the conjunction between government policy and how it affects and impacts, often negatively, the marketplace or transactions, labor market relationships, business cycles, things of this sort. And so looking at what you call it, maybe public policy economics, if you will. And so, of course, that kind of stuff is sort of more in vogue nowadays for obvious reasons, which obviously we'll be talking more about. And it's actually fun for me to do something like this because, first of all, I get to do a lot of stuff like this. It's one of the fun parts of my job. But I rarely get to do it with someone I have frequent conversations about on these topics. And so I just happen to have some cameras here. So it's actually going to be a lot more fun, I think, than most of the things I get to do in my life.
Yeah, you and I were saying we've had these conversations on the back patio at your house. And one of the things about your family is that you found love with another economist, which is fairly rare, I would guess.
Yeah, well, rare not just because most economists are male. There are very few women in grad programs, which is unfortunate, but it's the reality. But no, yeah. So Crystal and I, my wife Crystal, is also an economist. She teaches economics at Grand Canyon University. It's funny because we talk in shorthand all the time. So I mean, I know people ask us, well, do you guys talk about economics all the time? It's like, well, no, not all the time. And we still talk about things that married couples talk about. Their children, we've got 3 young boys. We talk about what we want for the boys. We talk about financial health, the health of our marriage, all that kind of stuff. But yeah, we do talk about economics. But even when we talk about the non-economic stuff, we use economists' terms. It's shorthand. It's easy, right? Because I'm talking to another economist, I can use phrases like time horizon, transaction cost, opportunity cost, and it makes perfect sense. And so it's a way to really trim down a lot of the cruff that might happen with marital conversations, which I really kind of like.
Well, you would, and so would she, right?
It makes it all more
efficient. And I've been in those conversations where I've seen the two of you do that, and it's pretty fascinating.
Yeah, dinner parties we hand out glossaries so people can look, oh, that's what they mean by that.
Well, you were just telling me a story too about your oldest son, Calvin, and his assessment of instruments when he decides what instrument to select, he chose based on supply and demand.
Yeah, he realized he chose trombone. I'm a drummer, so my background is in drums, and so I still drum now and again. But he wanted to be trombone player, and I asked him, well, why did you choose trombone? And he says, well, I like it, but also because there's not very many trombone players at our school, and I know I'll always have a place in the band. I'm like, well, there you go. He's looking at scarcity, supply and demand, and he's applying it. So he made me really proud that day.
Perfect. Yeah. Like you said, you've got 3 boys. Who knows if they're going to be economists too?
Hard to tell.
But they're great kids, and
Thanks.
it's really fun to spend time with your family. One other thing, though, about your family, before we get into the nuts and bolts of the current economy, you have a hairless cat.
Yeah.
And it's disgusting. So
some people have told me this.
I need to understand and need to have you kind of walk me through
All right.
the value of Winston. That's his
I'm
name.
happy
I've
Winston's
met
name.
him.
Yes.
He's gross. What is redeeming about a hairless cat?
Gross is a very fluid term. People can make different things gross and just define them in different ways. I will say we find him very, very lovable. And he's not the pasty white hairless cat that you would see in like the Austin Powers movies. He is a Sphinx cat. He is hairless, but he's black, as you know, right? He's very dark. So he looks like he has hair, and he has a slight little bit of hair, right? A little more than most of the white pasty ones. What endeared him to us was the fact that, well, 2 things. I grew up as a dog person. Mm-hmm. This is a very strange experience for me to be saying I'm in love with our hairless cat, because I grew up around dogs. Now I have a cat with no hair, and so you have to put clothing on him from time to time so he doesn't get too cold. So I'm one of these people that now owns a cat you have to put clothing on. Yeah. But yet, I'm cool with it. Dogs are a lot more high maintenance than most cats. And so I'm at the stage in my life where I realize, I've got 3 kids. I don't need a dog too, but I like having a pet. And so cats are low enough maintenance for me at this point in my life that I'm cool with it. But the second point is our kids got allergies. So, and having a hair full cat was going to be an issue. So, and the other option for dogs was hairless dogs like Chihuahuas. Now I find those gross. So I wasn't really into that. And I probably offended all of the Chihuahua owners on this live stream. So I apologize for that. But that's why I went the hairless. We, as a family, went the hairless cat route. And
okay, well, fair enough. And I apologize if I offended hairless cat owners besides you, although there are none. No. So I'm not too concerned. I didn't know anyone.
That's true. We are a very rare breed.
Yeah, I don't even know where you'd find it. We'll put some posts up. Maybe we can get a picture of Winston.
We can do that.
And we can put him up online. So, all right. You're an interesting guy. You're an economist. You're married to an economist. Mm-hmm. You've got a hairless cat. You've got 3 kids. Actually, my first question was about you and Crystal, your wife. You know, you put the kids to bed, you sit down to have these conversations in 2020, right? What comes up? I mean, what are you guys talking about on the couch after the kids go to bed when you're having economic conversations?
It's interesting. I often find, and this is one thing I love about being married to another economist, and one that I can communicate so casually with, is the idea that I bounce off ideas off my wife all the time. It's like, here's what I'm thinking. Because in my day job, I get to sit down and do the kind of research that I want to do about public policy. And I get to choose my topics for the most part. But there are times where I say to myself, there might be an interesting application over here, but I haven't really thought through the implications, or I haven't thought through what kind of hypothesis I need to be testing. So I'll just throw this out there. And she helps me sort it out. In a lot of ways, she bats down bad ideas. Stuff that I think, this is a great idea. But talking it out, I'm able to say, what? She's right. That's actually not a very good idea. And being able to explain it to someone else is one of the most important things. And by the way, I don't do a lot of teaching in my job. I'm really mainly research focused.
Yeah, you do a lot of research, which we'll talk about. It's really interesting.
Yeah, and Crystal she's in front of students all the time, every semester at GCU. And so she has a much better sense than I do even, of what normal people, especially younger people, are thinking about in terms of economics. A lot of the time, economics is filtered, from our perspective as economists, it's filtered through the lens of transaction costs, efficiency, things of this sort. But when people hear of economics, they think of a couple things. They first of all often think about, what does that mean for financial markets? Well, that's not always what economists do. It's not what the kind of economics that I do. So it's impactful on the kinds of economics I do, but it's not the direct. That's more like business economics or financial economics.
Right.
But the second thing that most people think about is the fact that they don't think economists are thinking about people. They think they're not compassionate enough or something, or not thinking about the bigger picture. And that's an interesting pushback. And it's a harder one to make. In some cases, it's sometimes a moral case, more of a qualitative case. But there's a lot of economics, I think, and we can talk a little more about this later too, not to get too far down the rabbit hole at the beginning, but there's a lot of individuality that's assumed in economics. And economics is not, in my opinion, the best kind of economics. It isn't about big picture macroeconomics. It's microeconomics. And that's mostly what I've focused on in my career, is the idea that people will react to incentives and to rules and to limits on what they're seeing, either in their life, whether it be limits on the amount of money they have, limits on time. Everyone has a limit of time, by the way, right? That's universal. There's all of these types of limits, and economics is about how people deal with those limits and what choices they make, and how other rules and policies can impact and influence those choices as well. And that really is where I think is the heart of economics. And so in a lot of ways, it's about the vibrant human condition. In a way that some humanities might be, right? Now, granted, humanities scholars would probably disagree, but I do think there's a lot about how humans think and operate in a world. And our society is going to look a lot different than it was 100 years ago, and a lot different than it's going to look 100 years from now. And we may be on the precipice of one of these transformations that we won't realize had happened until after we've lived through it, right? A lot of these transformations can't be teased out while you're living them.
Yeah, great illustration. So even when you say, look, we might be on the precipice of one of these transformations, I can feel people going, he doesn't care about me as an individual. This doesn't feel like an exciting precipice that I'm on. So, but I get that, and I also totally understand the situation that you're in where your wife tells you your ideas are bad. Because
this is also universal.
That's a universal experience. Yours just happens to be economically focused. But
it's narrowly defined. It's
yeah,
like, you're wrong about
I have
this.
all kinds of business ideas that have been absolutely destroyed by my wife, which is fine and probably right.
Exactly right.
So that's a great launch into my next question, which is, you're talking to Crystal about this economics, you're throwing out ideas, and you're thinking about what is the worst thing that's happening right now? Because I feel like we could go into all kinds of different areas about what's going on right now. And you specialize, particularly I understand, in public policy and its impact on what's going on. So just to know that your response probably involved public policy. But what's worse? We'll talk about what's best. Don't worry, there'll be hope. But what's worst about what's happening right now?
So I think part of the problem that we're encountering with the current situation is there have been a lot of governments that have been very interested in doing a one-size-fits-all kind of policy, right? Economics, if it's about people, it's also about nuance. It's also about if there's going to be some kind of policy response, it probably should be targeted or nuanced in some way, and at least not oblivious to realities, right? So, and also bear in mind, we're in a very unique situation. In a place in history that we've never really seen before. And so, and you and I talked a little bit about this. The only other time we've seen something like this before was in 1918, the Spanish flu pandemic. But yet, the economy and the world was so different then than it is now. Even there may not be a lot of overlap and commonality. I want to circle back to that in a little bit. Yeah. But in the present tense, we're seeing the kind of economic drop-off that is very rare. In fact, I don't think I've ever seen it, certainly not in history, and I've never seen it in my lifetime. Usually when you think about recessions and business cycles, it's because, to talk about supply and demand, there's something going on either side of that equation. One influences the other, of course, but let's say demand, for instance. You got people losing jobs. As a result, they have less money to spend. They're not buying as much, and therefore supply is going to move, price will move, and supply and demand will equalize. But it's being driven by one side or the other, even though there are influences of both sides. Now we're seeing something where you've got a contraction in both supply and demand. You've got a contraction in demand because you have people losing jobs, and you've got people, smaller paychecks, being able to sort of live life with kind of a more narrow means to which to do so. But what's unusual about it is because a lot of those unemployment trends have been driven by the supply shock of government saying, we're going to shut down effectively most of the economy, simultaneous to everything happening along with the sicknesses being generated in the amounts that they were back in March and April.
Right.
So you've got this contraction on both sides. We've never seen that before. And what's especially interesting about this is we're starting to see now...
We've never seen the economy on its own...
Right.
Calibrating, maybe would be the right word, to meet supply and demand needs.
Right.
And the type of government intervention to actually force contraction.
Yeah, because usually the government interventions occur after there's been a downturn, usually to try to get people sort of buying things. For instance, a good example is the idea of sending out stimulus checks.
Right.
They did that this time, right? But the numbers just came out last week from Bureau of Economic Analysis, looked at GDP trends. Okay, so we had this first quarter of 2020, we had about a 6%, 5.8 thereabouts decline in GDP. Okay, so it's the national wealth declined. Not too surprising, but that only was the beginning, the front end of the uptick of coronavirus cases. By the time we got into the second quarter, and we had the numbers just last week for this, you saw a 30% decline in GDP. Now that's for the quarter. That's not annualized. That may go up again, and we'll talk a little about that later if it might go up, and what conditions we would need to see for that to go up. But what we began to see was during that time of the lockdown, you had a lot of basically the shutdown occurring that then was leading to these demand contractions. You saw people shopping a lot less. So your consumption went down considerably.
Right.
Income did not go down very much. Now that's very interesting. Usually you see income go down a lot.
And you're including stimulus and income.
Well, okay, that's correct.
Okay.
Usually wage income went down.
Yeah.
Consumption, purchases went down, but income went up. And that's because the government effectively is flushing the economy with money.
But isn't that fake income?
In a lot of ways it is, and in fact it's not really going into consumption. It's not doing the thing that government infusions of cash usually do.
So what's it doing for the individual?
Well, actually what it's doing is that basically it's bolstering out their savings account. And
When
all
you
this
say
money
they,
is going into
that,
savings.
I mean, is data showing that's across the board from the person working for minimum wage up to the person making six figures and more?
That's a good question. They haven't released any data to show, right? There's a lag on that kind of thing.
Generally speaking,
my guess is chances are people who have, I'm going to use an economics term, more elastic demand. That means that, well, they can kind of turn the dial here and buy less of this, buy more of this, but they still can buy stuff.
Yeah.
For someone with minimum wage, you're probably lost your job, you're probably using that money to buy food, so you're probably not going to be saving it. Okay. But for people who are maybe middle class, upper middle class and higher, that money is typically going into savings accounts. They're just sitting on it, right? Because there's uncertainty.
Okay.
And a lot of that uncertainty, I would say, is not just motivated by health concerns and pandemic concerns. Right. It's motivated by uncertainty about what government's going to do in the future. Okay. We don't know how long these kinds of shutdowns are going to last. We don't know if they're going to be doing them later in the fall, if there's a second wave of sicknesses cropping up. Of course, we're coming into flu season. We don't know how that's going to impact things. So I think that uncertainty is what's motivating people to hold back.
Yeah, I mean, anecdotally speaking, just for myself, I've talked to several people in that middle class range, maybe upper middle class, where they say, look, I didn't need the stimulus check. Right. So I gave it to charity, or I put it in my savings account, or I used it, I'm holding on to it because I'm concerned. So I mean, I definitely have had that experience. I'd be interested in our listeners too. Hopefully they'll chime in and say, yeah, that's the same kind of experience we've had. But okay, so people are they're not hoarding. They're just
it's called precautionary saving in the literature is what they call it. Yes.
All right. So they're doing that. But back to what's the worst thing about that for an individual? So if the worst thing that's happening is government is contracting the economy, and the economy is contracting itself, what's the worst impact from an economist, in your opinion?
Sure. Now, I'm going to quibble a little bit with the word worst. And I say that because, again, like an economist, some things that look like they're negatives are actually positives along the way, right?
That's a very optimistic economist.
Well, but think about it. Someone losing their job is a negative outcome. Okay. It's something that people are very unsure about. It creates a lot of uncertainty. Right. But then, if you've got more opportunity available to you, maybe you're going to move someplace that has a more robust job market, or maybe you're going to figure out a new skill that you want to do, right? The problem is, and I think this is where I come in with the worst part, is that the trends can impact people in certain ways, but the one-size-fits-all rule that government puts on for how easy it is for you to get another job, if let's say there's something like an occupational licensing requirement that says you need multiple thousands of hours if you just move over the state line. Maybe you've got a license in one state, but you move to another state, maybe they've got cheaper housing prices or lower rent, and you want to move there because you're trying to save some money, but it's going to be harder for you to get a job because of these licensing restrictions. Those are all government driven by nature. And so these types of differential impacts, which are disproportionate over a whole range of labor market categories. That's the kind of thing I worry about most. I do think those are actively bad things overall, right? So the idea of of business cycles being bad or good per se isn't something that really typically enters into the economist mindset, but the idea that maybe there are outcomes that are suboptimal, that are not good, mainly because of a government rule of sorts, that may in and of itself may be outdated. Maybe it had good reason to exist in the 50s or 60s, but we've got technological solutions now that overcome a lot of these concerns people had 40 years ago about certain things. And so these types of mismatches over time, government moves very slowly, markets move very quickly. And I think, and when I mentioned the precipice, what I'm thinking about when I think about the precipice and things like labor markets is I feel that we're on the verge of a kind of movement in labor markets that a lot of economists and futurists have thought about for years, the idea of working remotely and whether that's a sustainable long-term option. We're seeing people moving out of city centers because they're realizing there's no need to be there. To give you a good example, San Francisco, right? It's a tech center, it's a hub, but it's chronically, its reputation rather is of one that's of chronic high prices for everything and housing in particular, right? And so imagine you've got these large companies, Facebook, Google, Apple, all based in Silicon Valley, and they basically say pretty much simultaneously and very quickly earlier on this year, we're going to allow our workers to work indefinitely remotely. If you're a worker at those companies, let's say you're doing coding or something, or you're doing something that clearly is remote and mobile enough to be able to do it anywhere, are you going to start or continue to pay San Francisco rents? You're probably not going to. Maybe you're going to move someplace cheaper. Maybe you move to Texas, Arizona, maybe even as far as North Carolina. There's been some economists that have started to look at this and to see where rents were trending up and down relative to this time last year. And what they saw was for the first time in decades, a massive decline in rents in San Francisco because people were moving out. They realized we don't want to pay San Francisco rents if we don't have to report to a San Francisco office. We're doing our stuff remotely. Let's go move back somewhere else. And so you do see rents going up, however, relative to where they were last year in places like Charlotte, Houston, places that have lower costs of living. Phoenix even, yes, exactly right. So in a lot of ways, we're benefiting from that here in Phoenix. But the fact that you're having people becoming less aggregated in city centers and more disaggregated, I think that's going to have a really big impact, positive impact, I think. But it's going to be an adjustment process. People are going to need to learn new ways of doing business from the businessman's perspective and from the employee's perspective, right? So this is an adjustment for both.
Yeah, and I want to get back to the idea of government getting in the way of that, right? Because that's what you alluded to, government setting a one-size-fits-all solution and stopping people with occupational licensing or whatever. But let's look at Phoenix, since you mentioned a couple of cities and the impact that it could have on Phoenix. What could we expect economically? So does that mean now we turn into San Francisco rent-wise? We turn into, I don't mean politically.
No, of course
I'm not trying to get an economist to speak politically, but rent-wise, do we see a spike? Because people are so much more attracted and they're willing to pay in between what they were paying in San Francisco and what they could get here.
Right. No, yes, we still remain attractive, and it's largely, actually, there's two reasons why rent would go up. In Phoenix, for instance. The first would be just simple demand. There's more people vying for fewer things. But that's a short-term problem because then you'll still have supply meeting that demand, right? People start realizing, oh wait, we can start building more residential properties or mixed-use properties or something, and then you get more people in the door, and that's going to eventually lower rents a little bit over the long term. The reason a place like San Francisco, and New York's the same way, and a lot of other big cities, Chicago like this, are problematic in this way is because they actually restrict the ability to build new housing. They've got zoning laws and environmental regs and state and local regulations that make it harder to build buildings and to increase supply. So we're not going to have those kinds of problems that a city like that would have. We're going to have, we might see an uptick in rents, but I think that's only going to be a short term until the market comes in, and we've got room to grow as well, right? So we're not as nearly packed in as a place like San Francisco would be. So parts of these are accidents of history, right? The reason why Silicon Valley grew up the way it did is a very unique circumstance. Cities trying to duplicate that are doing a disservice to their taxpayers
trying to control,
like, oh, if we just had more of this, like, no, you can't turn levers. People moving into places, that's what affects the overall success of a place. Migration patterns are very closely linked to economic growth, and so you find that people are moving to places that have stronger growth and making that growth even stronger. So it's sort of it's a pattern, really. It sort of builds on itself. And part of the reason I bring up occupational licensing, not just because it's what I do a lot of my work in, but also because it is one of the biggest barriers to people moving between states.
So a good example, I mean, you and I have talked about this, a nurse would be a good example. Needs a license in Arizona to practice, has licensed as a nurse in North Carolina, but it doesn't transfer? Is that?
Well, actually, if you wanted to move as a nurse to another state, if they don't have reciprocity with Arizona, not all of them do, then you'd have to get a new license.
New license,
Now,
right.
what's interesting about this,
which is a pain.
Exactly right. It's thousands of hours of training, and it basically acknowledges that, well, we don't think you're good enough, or we don't think the experience you had in your home state really applies or transfers.
Right.
Now, Arizona, to our credit, we actually have a new law that was.
Can I dig on West Virginia?
Please
quick,
do.
Because your
Please
wife's
do.
from
Chris
there?
is from West Virginia. Yes.
So I mean,
West Virginia is an
if
economic basket
they're coming
case.
from West Virginia.
Yes.
No, I'm just kidding.
No. Well, let's put it this way.
Tell
Yes,
Crystal.
I will do that.
I'm just kidding, Crystal.
That's all right. No, but the truth of it is, though, that what's interesting about these laws is that because it does restrict interstate mobility, but what's interesting is that one of the first sets of laws that state governors exempted their workers from, or more specifically put a hiatus on, were licensing laws once the pandemic started
Okay.
for healthcare
this
workers,
year.
because
Okay.
they realized we don't have enough doctors to deal with this,
Right, they were
especially in
flying
places
them
back
from
east.
different places.
Right, they're flying,
Okay.
and they were finding that, wait, they can't practice here legally because there's liability concerns, malpractice concerns, as you certainly know this.
Right.
So the truth is that they decided to go ahead and just waive those rules and said, we're going to accept your license from your home state. I think, and this is where I'm optimistic, I think that there is finally a turning point on this where governors, state governments, and individual workers who've already realized this to begin with know that there's really not a lot of sense in these laws. If you've got a license of consenting from one state, there's no reason why it can't reciprocate or transfer to another state, as long as you just go ahead and go through the process, just transferring your paperwork and you're good. Right. And you can open up your store or your practice on day one,
right.
Instead of having to go years of duplicative practice, right? So the fact that we're seeing a substantial shift in changes in those kinds of laws as a result of the pandemic, that's why I'm optimistic that if those kinds of things stay in place, if we start seeing state policymakers realizing that exemptions are what is saving them, not new rules, I think over time that's going to probably start gravitating toward less onerous labor regulations in that way. Now, maybe this is just short term. Maybe we'll forget about it very quickly.
Right.
It has happened before. But I will say that there has been a very strong bipartisan consensus, actually, among economists of all stripes and politicians of all stripes in all states, red states and blue states, Democrat and Republican at the federal level, that these licensing laws are actually very, very detrimental. In fact, I like to tell people this because it's sort of a funny bipartisan sort of thing. One of the last things that President Obama's Council of Economic Advisors did was write a report about the importance of getting rid of occupational licensing laws at the state level.
Really?
Now, you wouldn't expect that coming from a Democratic administration.
Right.
It's sort of a Nixon goes to China type moment, right? And I'm really aging myself with that reference, aren't I?
Good, yeah.
But the truth of it is, it's an unlikely person giving you a message that you wouldn't expect to hear from them. Now, I think it's a great report, and I don't just say that because they cited my work. They cited a lot of other work as well that we're all coming to the same conclusion from all over the spectrum. And so the fact that there's this bipartisan understanding that these are detrimental laws for people,
right.
Just generally workers all up and down the line, even down to places like barbers and cosmologists, barbers and cosmetologists, people like that, who you wouldn't expect to need to have a license, but yet you have to have them in every 50 state, and there's no reciprocity between them. Things like that, you begin to realize these are just senseless. And so I think that was the first domino to fall, and this is why I think we're sort of on the edge of a reassessing of what really makes sense for labor markets.
It's nice to, somebody like you who digs below the surface of what we see in the news, what we're just generally understanding to be happening, you can really actually find some nuggets of hope in there.
I think so.
There's bipartisan agreement on something happening that's freeing up people to move or do what they need to do to support their family. It's kind of
sure.
Encouraging because you read below the headline, I guess, or even deeper than that.
Yeah.
I want to talk about individuals in Phoenix as much as we can.
Sure.
You and I love to talk about the global economy, the U.S. economy, all these trends and things. But if I'm a job seeker in Phoenix, what are some things I should be doing right now? Should I be obviously there's an unemployment payment going on right now. I don't want to drive your answer, but
no, of course.
If I'm a job seeker or I'm somebody who's in a job and I'm thinking, well, maybe I'll make a move right now. You're not a career counselor, you're an economist, but
yes, important proviso, yeah.
Do some things come to mind for you as far as what the average job seeker or employee should be thinking about?
And this is probably where my optimism comes in, is the idea that, and of course, not being a career coach or a counselor, I think is an important thing to remind people of. long term, I think we're going to be in an upward trend. Long term, I'm optimistic that we will.
Sorry, long term.
Long term, and so that's the question. How do you define long term?
For most 6 months.
Yes. And 6 months
long-term.
is usually considered short to medium term for economists.
Right,
So when
but-
economists
yeah.
think of long term, you're thinking maybe 12 months, 14.
Oh, okay.
Or sorry,
That's actually
yeah,
shorter than I
24
would've
months.
thought, yeah.
Maybe up to a year and a half, give or
Okay,
take, right?
okay.
So, but that depends. That depends on the field you're looking at. Right? So tech field,
Okay.
short term, and rather long term is a lot shorter than it would be otherwise. So it depends on the industry you're in.
Right.
But I would say just for the broader trends. So it's going to be hard, and the question is, how long is that hardship going to last? How long is the downturn going to last? We don't have a lot of corollaries for knowing what that's going to look like. So again, I know I'm speaking in very abstract terms, and because and I think this is applicable for pretty much every major metropolitan area. Is the idea that you're going to be in an uncertain period as a worker. In any place you're going, right? But some are going to recover faster than others. I think part of the discussion will be about how quickly government regs scale back, and the ability of cities and states to open up again,
open things up,
and so
yeah.
and that's going to be varied, and that's going to really kind of be a natural experiment of sorts, right? You're going to see some cities stomp on the brakes again. You're going to see some just kind of let it go with the flow and see what happens, and then we'll start to see. It's going to be a little while before that happens. And so if you're in a city that's going to have the step on the brakes type mentality among your policymakers, it's going to be a little harder to find a job.
Do you think we're going to have that here?
I think Arizona is unique in the sense that I do not think we're going to have that here. Other places you might expect, Illinois, New York, places like that.
You'd expect a fairly hot market for a job market
I would.
sooner here than somewhere else.
I would say
because of
that
those
mainly
policies.
because Phoenix has got a lot of fundamentals that are working in its favor. I mean, climate's part of it. I know it's flipping hot a lot of the time in the. I had to clear my language there. No, during the summers. But the point is, people will move. Climate actually is a great predictor of migrations, migrations, employment growth, things of this sort. You're seeing places that are warmer growing faster now. They're leaving places that are cold. Right? For me, Washington D.C. was too cold. Phoenix, perfectly good for me. Right? My wife from West Virginia, it's not cold enough. Right?
Yeah.
It takes all types. But the truth is, people are going to gravitate toward places like this. Cost of living is pretty good too in Phoenix, even with people coming in from California. Right? People are choosing to vote with their feet, if you will, and so that's always going to be good for any job market because it's going to increase not just the supply of willing workers, but also the demand for products that people are going to need to come in and provide. So as long as government's going to let them do that, I think you're going to have a robust job market. So I think we're pretty well situated in Arizona with the fundamentals that we've got in place, kind of baked into the cake. We're not kind of crawling out of a recession the way, or a downturn, or a brain drain like a lot of the places in California are experiencing, right? So we're actually benefiting from a lot of that in a lot of ways. And so I think we're going to be set up for some good fundamentals. Question is, when does the regulatory scale back begin? And that's unpredictable at this point.
Okay, yeah. Unpredictable is a word you economists love to use. Just
Well, we have to because
caveat at the end.
yes, caveat is the one hand, other hand thing. Yeah,
I get that. So, but then I'm an employer. Say I'm a job creator. I'm a business owner. Let's say, same kind of perspective. I mean, there's going to be new opportunities for services. There's going to be an increased labor force available to meet those needs. And expect growth in the Phoenix area from that.
I think that's right. I think that's right. Again, so, and also consider workers are moving across state lines, but so are companies, right?
Right.
So you have bigger companies putting up headquarters in places and whatnot. But I talked to someone who was from a major Fortune 500 company a few years ago, and they'd moved some of their headquarters to Phoenix. And I said, well, why did you choose Phoenix? Because I'm always curious, because as an economist, I can talk about the numbers and the big picture stuff all day. But when it comes to like micro stuff, that's sort of the real world choices people are making, business people especially, none of them who are thinking like economists, they're thinking like business people, which is probably, they're much better off that they think like business people than they're business. But I wanted to find out, why do they choose this? And he goes, well, because Phoenix actually has an airport that makes it really easy, and in fact, just sort of physically located where we are geographically. It's easier to get, this 2 years ago, so things are changing now, of course, with the pandemic, so airline routes are also unpredictable or uncertain at this point. But at that time, when that decision was made, you could get a very cheap flight to pretty much all the major markets that they served in Texas, Nevada, even Washington State, California even, because they moved out of California, right, for a lot of reasons, cost related mostly. So there's a lot of attributes here that are even beyond just climate and having a good worker base. It's just sort of the geographical reality of this is a generally good place to be for a lot of things. And so you start hearing all these companies moving out of high-cost places into low-cost places, and Arizona is still going to benefit. And even if we did have a slight increase in cost, and we probably will over time, that's just the nature of things, we're still going to, I think, be better situated relative to other places. And of course, relative is something economists talk about all the time, right? If it's all relative to other places, you're better off.
So you made this other comment that you just reminded me of it right there. You made the comment when we were talking before we went on air, and you were talking about the demographic related to COVID and the impact it could have on the labor force. I mean, something that I've been watching has been the trend of, baby boomers are going to be moving out of employment pretty soon.
Right.
And there's going to be openings for all kinds of Gen Xers and millennials to move into those positions. Now we are seeing an impact. You mentioned that in 1918 there was that the Spanish flu impacted working age people dramatically. Does that economic? Does that have an economic impact?
It would be. And Arizona is actually
with the elderly.
Yeah, fair enough.
Right,
in fact, let me go ahead and say something negative about Arizona. Not because I think we should be saying negative things, but because maybe I have been too optimistic, right? So let me go ahead and drag it down for a little bit. No, Arizona is like Florida. Again, one place that people like to go and move to. Yeah. But we have what would be considered an inverted bell curve in terms of demographics. We have a lot of young people, meaning below 18, and a lot above 65 years of age. But in the middle, there's not very much. So if you're one of these people who are in, say, your 20s to 30s, and you're looking for good opportunities, there's going to be a fewer number of people to fill those opportunities from an employer side. So you're going to have, once again, things start recovering, you're going to have a lot of great opportunities that you wouldn't have in a place that had a more normal distribution.
Right.
But there is a challenge here. If you've got so many people leaving the workforce, the baby boom folks retiring, you are going to have labor restrictions or labor shortages, if you will, over time. But there also creates these public finance problems where you've got a lot of people who are out of their working years, are not paying a lot in taxes, but then you've got all these people who need to be financing schools and
school
such.
System,
So there's a whole series of policy challenges that come with that. But what's unique about the comparisons to something like the 1918 pandemic, which is the only thing we've really seen in this last century anyway, that has anywhere close to this, because transmissions were the same in terms of how it was transmitted through the air. There was actually an early, what you might call an Amazon boomlet, mail order catalog saw a big uptick in 1918. People were ordering stuff from home. There were school shutdowns. There were shutdowns of government buildings and stuff like that, and businesses, right? So there's a lot of similarities
there's probably
there.
a dispersal of people from the cities too, right? To get away from the flu?
Because well, there's also dispersal from other cities. There weren't a lot of city centers in 1918, so the demographics look different. Actually, the spread of population looked different. Mortality rates were a lot higher than too. People died more frequently at younger ages. And so we're in the sense that we've got antibiotics, which they didn't have in 1918. So we've got a lot going for us technologically that we didn't have in 1918. But what was interesting about, I say interesting as an economist because it's hard to talk about people dying.
It's okay.
Right, it's hard to talk about people dying and falling out of the workforce in a literal sense and try to be compassionate about it. But the reality is it's affecting different classes of age groups differently now than we saw in 1918. It's largely centered on senior populations in terms of death rates here in the United States.
Who are already out of the workforce.
Who are already out of the workforce, whereas it was striking people out of the labor who were in their prime labor force years in 1918. And so you saw a really large unemployment impact, or just labor market impact, I should say. Because,
and longer term, because you had to wait for people to get older.
To repopulate, exactly. So that's another reason why I'm actually optimistic, and it sounds morbid and macabre, but the reality is that we have a very robust worker base still, because of the
Phoenix,
way
what you described with Arizona, Phoenix. If people are migrating in, those are workers migrating in.
Right, and as long as we allow them,
they'll even maybe change that inverted bell curve you talked about to boost up that middle.
I think that's possible, right? And all of these things are going to change over time, and so I think we will start seeing a more normal distribution, probably in a generation from now, for instance. Yeah. But you are going to be seeing changes like that because people are going to make decisions based on the real world impacts of what they see around them and why they want to make themselves better. And that's one thing I think I, as an economist, always assume. People will work to make themselves better. They may do it in ways that don't look like they're making themselves better. They may take side tangents or side trips down to things that don't make them better off. But overall, people are going to gravitate toward something that's going to make them better off.
So this is one of the things I enjoy most about sitting with you and Crystal, your economist wife, is that whenever I'm doom and gloom or cynical about the new rules and regulations that are being put in place that I don't agree with in some cases, you always say, there may be rules and regulations in place, but people are going to act in their own self-interest, and under those rules and regulations, they're going to find a way to make it work. And that's always, I feel like that's one of the most encouraging things about economics.
To quote the great philosopher Ian Malcolm, life finds a way.
Yeah.
I think the U.S. economy is actually very, very resilient, right?
Yeah.
And actually, J.M. Barrie, who wrote the Peter Pan books, right? He's at the little epigraph at the beginning. It's like, all of this has happened before, and all of this will happen again. There's a cyclicality, I think, to things like this. And even though we haven't seen things as dramatic as we've seen them this year, I do think that there's enough resilience in the U.S. economy generally, and in certain pockets within specific states, that we will be able to weather the storm. And it's going to be in ways that we didn't predict or expect. It might be because more people move to different places and move out of the big cities. It might be because more employers let people work remotely. But it might be for other reasons, and we just can't predict that right now. But the truth is, I think that we have enough resilience, and we've proven in years past that there's been enough resilience, especially now in the U.S. economy. Now, I think that doesn't mean we're out of the woods. I still think there's some national policies, which we can get big picture if you want. Right. I think international trade is very important, and we've got a lot of tariffs that the current administration is pursuing. And I think that's going to be a real big, strong counter headwind for international, or more specifically national, progress and growth. I think tax policy is important, and you're going to see natural experiments going on within the country and between countries as well. So we're doing pretty well so far in the U.S. on that, but that may change in the future. We don't know. So and that's another point too. We're in an election year.
Are we?
We are. I don't know if you noticed. I got a lot of mail with pictures and stuff, and a lot of weird polemic. But no, the truth is that uncertainty is actually generally quite high in election years.
Right.
And so again, we've got a compounding factor here, right? Now, does that mean that we're worse off than we would be before an election year? No, not necessarily. But the uncertainty of it, the long term, I think, is at the moment there in the air. And so you've got to consider that we'll probably have a little more stability come, say, the fourth quarter of this year. So again, to get back to your original question, which I've gone far afield from about being a worker, it's going to take some time. But I think there's going to be a lot of great opportunities, especially in a place like Arizona, for a young worker who is interested in investing in their human capital, making sure they've got the right skills to be useful to employers. They will be hiring. It's just a matter of when.
That's like a Chamber of Commerce commercial at the Phoenix Business Forum today. I love it.
Didn't really want to make it sound that way, but I guess you're right.
That's encouraging. And I think, I don't know, I'm looking at the time, I'm not sure, we don't have a ton of time left. It sounds, again, I was going to ask you kind of where's the country headed in the next 5 years, where's the city headed, but you've pretty much addressed that you feel optimistic in the long term as we get through the uncertainty of the election, as we get through the initial impacts of the pandemic and the related contraction in the economy, that there's reason to be optimistic, particularly in Phoenix. So I don't know if we need a 5-year projection or prediction from you, but makes me feel a little bit better.
Oh, okay.
I wish you could predict, because as a business owner, I'm thinking,
I know.
Where can I take advantage of this? Where can I see a trend or a prediction that I can pursue, right, as a business owner, and create a new service of some kind?
See, if I were good at predictions, I wouldn't be an economist. I would be a day trader, right? But that's not why you brought me.
No, we're not going to do day trading. Listen, I wanted to make sure we got some book recommendations or article recommendations from you before we wrap up, because I think economics is something that people don't study after Econ 101 if they've studied it at all.
Right.
And then, but it's such a useful tool from a general standpoint, economics, but also like these articles that you've referenced about the 1918 issue, or something for business people to look into that might be useful for them. Do you have some of those?
Yeah, no, I think one of the biggest misconceptions about economics is that it's a set of topics to study. And the reality is it's more of a framework for thinking about the world, thinking about trade-offs, thinking about how to do things better, right? So I think the best form of economics are ones that think big picture about the framework of how you structure your problem solving, or how you structure your approach to things. And so there's 2 books in particular that I always recommend to people. They're short. There's not, in one of them, there's no math at all. The other one might have very little math. And when I say math, it's really no more than just adding and subtracting, or just seeing where things move. The first one it was an older book. It's called Economics in One Lesson by Henry Hazlitt, Hazlitt, I believe. There's 2 T's.
All right.
And you can get this one on Amazon, of course. It's very
Economics
short.
in one
in
lesson.
one lesson. That's
All right,
correct.
We'll post that.
And it's really literally one lesson about economics. Arguably, I won't steal the thunder from Mr. Hazlitt, who's passed away a long time ago. But it's one very specific idea, and then it just follows the logic in a whole series of chapters about what does this one idea lead to when you're thinking about decision making. The second, that's sort of bigger picture and broader, and deals with multiple concepts of economics. It's called Common Sense Economics. One of the co-authors is a guy named James Gwartney, Gwartney. I'm a little bit biased. Dr. Gwartney was a professor at Florida State University when I got my econ degree, and I've gotten to know him over the years. So he's a really wonderful person and a great economist. But his book, Common Sense Economics, is written specifically for people who either had never been exposed to economics, didn't take a class in high school or college, or didn't like economics because it was taught very poorly. And it was taught too analytically and too quantitatively, and that's for most people, I'd be totally honest. I mean, I'm doing my best to try to get people to think of it in different ways, and Crystal's doing an even better job than I am. But I think books like this help people understand economics as a framework for thinking about the world, thinking about trade-offs, and boiling it down to some very simple principles and some simple ideas. I think is a much better way of going about it than thinking about it in terms of trends in GDP and things like that, which really isn't, in my opinion, real economics.
Well, and just to go back, you used an example at the very beginning about your son who made an economic framework decision to pursue the trombone because there was a limited supply of trombone players. So you can apply it in almost any area of life.
Exactly right.
And great recommendations. We'll get those posted online. For everybody. I think unless there's something you want to make sure everybody knows, I think we'll wrap it up. Is there anything that you're going, oh man, I want to make sure I'm an economist and this is just burning in my...
No, we've covered a lot of ground, and this has been a lot of fun though.
It is a lot of fun. We need to do more back patio because I've got more questions, right? I got to find that out. We can't spend all day with you, unfortunately, but Steven Slivinski, thank you for coming. Let me shake your hand, sir.
There you go.
Yeah,
very much.
Appreciate it. Thanks for tuning in. I hope you enjoyed it. We're going to continue to do these conversations. We're going to post those book recommendations online on all the social media networks. And again, a big thank you to Living Streams Church for hosting. A big thank you to Mel Schultz for his vision in starting this and sponsoring it. And I did want to take a moment here as we close to invite up the senior pastor from Living Streams Church. He's going to come up real quick and close things out for us. His name is David Stockton. He's also a great guy, close to as great as Steven. And there he is, sure enough.
I'm so good at economics. Am I in the picture?
All pastors are.
You go down a little bit.
I can move.
Well, I'm just going to pray a little blessing over us. Whether you believe in Jesus or not, it's no problem. It shouldn't hurt a bit. But we just want to make sure and do our part to bless the community that's tuning into us. So, Father in heaven, we do thank you that you made us, you shaped us, you formed us, and you do have good plans for us. And I just pray for each of the people tuning in right now that something from this would actually help, Lord. It would help them in their decisions day to day. It would help them in their family dynamics. It would help them in their future, Lord, and it would give them peace as well, knowing that there is hope in everything if we can hold on to you. So we just thank you for this time and pray your blessing on all the people watching. Amen.
Amen.
Thank you.
All right. Take care. We'll see you next month on the first Wednesday, and we'll be posting stuff online. See you later, everybody. Thanks again, Steve.
Hey, thank you.
Yeah.